Hello and welcome to part 2 of my National Cannabis Awareness Month special series. This week, we're featuring highlights from my interview with Bruce Linton, the founder and former CEO of Canopy Growth Corp. Today, we're talking about the opportunity in the beverage industry and why that's such an attractive vehicle for consuming cannabis. We also hit on how I knew to invest in Canopy back in 2017 and what signs I look for in high growth markets. Check it out.
Yeah, and it's interesting you brought up the beverage question. You know, I've never personally tried a cannabis beverage, but I saw an interview with you the other day where you described the cannabis beverage, and I have to say that you listed off some of the benefits: no calories, no dehydration and hangover, similar sort of effect, a nice tasty drink. That to me sounded very appetizing, and I could see that becoming a huge market. Is that an area investors should really be looking at?
I think they should, and part of it is, part of the reason I started pushing beverages about 6 years ago is, why fight society's norms? Right? Are there a lot of smoking bars? Are there a lot of those shisha lounges in North America? Not so many. But are there a lot of bars? Yes. So if you make a beverage, could you make a beverage that would go in a glass? Yep. Would it go on ice? Yep. Could it be licensed? Would it be social? So I like the notion of beverages because they don't involve smoking. Many people don't like the smell, and there's not enough venues you can congregate and smoke. So I went, let's be like a beverage. And when you think about it, the beverage format transports really well. It's socially accepted. Second part is the no calories and no hangover. I mean, you get up in the morning and do something fun, but it's not go to the gym because you didn't get fatter last night. Imagine this summer, I expect fully in a number of countries, there will be concerts which are licensed for cannabis beverages. And when you go to that concert, you're out in the lawn, COVID's behind us, and we're having the beverage, and it's a great concert and a great beverage. How likely are you going to be to go to the point of sale and buy that beverage after that great experience? Super likely. And so I just think it's a wave that's not even really understood yet. And I think one of the states in the last month, may have actually had more revenue from cannabis taxes than they did alcohol. I think it was Illinois. So when you look at a state like Illinois, recently, neck and neck are the taxes they gained from alcohol versus cannabis. And this is after cannabis has just been around for 11 months as a really properly regulated platform. So, you have to expect every state's watching that, every state wants that, and alcohol is wondering when does it get worse, so they're going to want to be in this game.
Yeah, and it's incredible when you look at the numbers for, say, millennials. Millennials' alcohol use has really dropped compared to past generations, but their cannabis use has gone up. So it seems like the alcohol market is kind of on the way out, and the cannabis market is moving in and taking a lot of that market share.
Well, if you have a chance to hang out for an evening with 2 or 3 drunk people or 2 or 3 stoned people, it's a much more pleasant evening with the people who've had cannabis. And we're staying on that side of the street. I understand recreational. I think it is the big topic now, but there is so much durable value that is unlocked behind that when science, like when the feds actually regulate cannabis, it means universities, patents, think about regulatory, FDA, all of those players can actually activate. And the most important thing for an investor, when all that happens, we're no longer just retail investors. There's a tsunami of institutional investors who can't play in the space yet because the SEC and FINRA and a lot of their governance regulations say you can't do what's federally illegal in the US. So we're talking about something now that there's a massive trade just starting, and the institutions right now are going, hurry up and let me get in.
Right, absolutely. So Matt, I wanted to get to you on the investment side of it. Now, you called Canadian legalization a year in advance. I foolishly ignored you at the time. But one of the reasons that I wasn't ready to go all the way in is that cannabis stocks seemed very early to me. Most, or at least many of them, were losing money. They were still in the early stages. Of course, you could have said that about Amazon for many years. There are a lot of companies that lose money that suddenly flip the switch. But you were able to name Canopy, you were able to name Tilray, Aphria, you hit the big winners. What was it that you were looking for at the time that made you so confident to tell thousands of people who listened to you what cannabis stocks to buy?
Well, I'm a big fan of these high growth, cutting edge markets. And so I was really initially attracted to the industry because you were watching this whole sector be born and no serious analysts were covering it. So for me, that was the perfect setup for an explosive, under the radar opportunity, one where investors could score, potentially life-changing returns. Cannabis is this unique industry. There's probably very few industries like it. So my analysis was part classic mining valuation metrics, like using all-in sustaining costs, because these companies are literally growing their products, and then part classic retail analysis, because these were companies that were moving from a medical market up in Canada to a recreational one. That meant you had to have brand visibility and recognition were key, celebrity partnerships and endorsements, not to mention their market share, as well as these domestic and international footprints. As Bruce pointed out, you can't have a $20 billion company that's only relying on the domestic Canadian market. So I targeted companies that could produce cannabis at a cheap or at least reasonable price, sell it for the highest premium possible to the most number of people possible. And that was just like this winning combination. So when I first recommended Canopy, you could see clearly that quarterly revenue was growing, 200% plus. To me, it was like a no-brainer in my book. And within 3 months, our shares had doubled and my subscribers did exceptionally well with that template that I, again, followed over and over again. Thanks for watching part 2 of our National Cannabis Awareness Month special series. Now, Canopy growth hasn't been my only breakout recommendation. Far from it. I use the same criteria that led my readers to more than 200% gains on Canopy in my monthly newsletter. Recently, I identified a high growth company that's signing deals left and right with big names like Samsung and Tesla. This company is in high demand and profits are soaring. Just click the link in the description below to get all the details. And make sure you subscribe to the channel and turn on notifications so you don't miss parts 3 and 4 tomorrow. See you then, and here's to high returns.